What's going on, everybody? Hope you're doing good today. As you can see, we're sitting at about 24 cents Dogecoin right now, and Bitcoin also is not doing very well. So this is a good time to make this video because we need to talk about what's going to happen next so that we can be fully prepared. Now, if you're not already subbed to the channel, click that button because we talk about this every single day, and you will have already known why we're here. You would have expected us to be here, and you'll kind of already know what's going to happen next. But for those of you that have any questions, here's your video. So basically, as you can see, like I said, we are under 24 cents Dogecoin. If you look here, you can see this red line right here that I drew when doing technical analysis on stream yesterday. And this was the 25 cent level, the 24 to 25 cent window. We are currently underneath of that. That is first bad sign. Now, what I want to do before we even go down to a lower time frame on Dogecoin is go to the market leader that's causing us to stay this low and look at what it's doing, because at the end of the day, if you're not already familiar, it does not matter what Dogecoin wants to do. If we don't have any big hype tweets or good news, Dogecoin's going to follow the market, and the market leader is Bitcoin. So we need to do our TA based off what Bitcoin's going to do next to figure out what Dogecoin's going to do next. So let's take a look at this from a step back here. As you can see, this was all-time high. This was where we were sitting before Elon tweet, and then we ended up crashing from about 60,000 all the way down to 29,000 here. Now, keeping this in perspective, what you can see here over the last couple weeks after the crash is that we've been trading overall sideways. If you're having trouble determining the trends, just use Webull's trend channel from point A, point B. You can see overall we've been trading sideways, but then over the last, couple days here, that trend went from sideways to now starting to become more of a downtrend, especially if you look at it shorter time frame there. So that's a bit concerning, but we could already tell that by just looking at the chart. If you needed some help, though, you can use the drawings trend channel. That's what I just did. Now, the thing here is, over the last couple weeks, we were trading in what you could say was bullish territory because we were above the 35,000 level support. And that's what this level is right here in between the absolute low, the swing lows and the swing highs, was this trend channel. And you can see we were doing some little rejections below it, but overall, most of the sideways trading was on the top side, the bullish side of that average price level. Now, and then you see it was also a pretty strong support as well. You see a ton of touches. Why is there a gnat flying around me? Trying to sabotage my video. But more recently, it wants my coffee, I guess. But more recently, if you look here, over the last couple days, we're now trading on the underside of that 35,000 support level. That's the first bad sign. Bad sign number two is when you look at how long we've been trading on the underside, okay? Look at how long we were down on the underside of 35,000 before. It was literally moments, you could say. Now, we are on the 4-hour time frame, so just consider each one of these maybe 1 or 2 days, all right? Because it's 4 hours, 4 hours, 4 hours, 4 hours. This is probably like 48 hours. This is probably a day. This is probably a little less than a day. And this is just, 8 hours, 4 hours. That's about how long we were on the underside here. Now, this has very obviously been multiple days. And if you look at the bottom here, you can see this started on about 620 right here. And now we are a week out from that point. So it's actually been 7 days now, almost 7 days that we've been on the underside of 35,000, and we have not been able to break to the top side of it. That is bearish, major bearish sign number 2. Number 3 is the levels that we've broken along the way and where we're currently being really comfortable trading at. And this is what I've been keeping you updated on the most over the last couple days. But actually first, before we go here, let's go back to the 4-hour and take a look at this very obvious pattern that's happening again for the second time here. If you look here, just over from kind of the 9th here, June the 9th over to now, you can see this pattern that's formed twice. Take a look. Now, I don't have a paintbrush here, so bear with me as I use the polyline to make do. Let's change the color too so we can actually see this just a little bit easier. Let's just use light purple, I guess. All right. So polyline, look right here and look right here. Do you see the similarities? If you don't, let me make this a little bit easier for you. 32,000 is a level, but it's a soft level, just like that little window right here of 35 to 36. So let's draw just another level right here and make that the same color. Now, do you see the similarities? If not, I'll spell it out. Right in this general area, do you see this, what looks like a sideways M and then consolidation right here? Well, then what happened after that? There was a major sell-off down. This was 36,000, by the way, all the way down to 29. That is a major move. Look at what is now forming again after the sell-off, because this was sell-off, M, consolidation, drop, sell-off, M, sideways M, doing the same thing. See here how it broke above, just barely above the resistance line even. The M first pullback came to support. Next one went slightly above resistance, but it was a fake out. Sold back off to support, dumped under. Here we have sideways M, pulls back to support, goes up to resistance, slight fake out, sells back off, consolidation, dump. This is my point. Now, this pattern does not necessarily have to finish out and repeat itself a second time. But as you can see where I'm coming from, most probable scenario, especially given what I'm about to say next, is that this does repeat and we see a sell-off coming very shortly, probably today, tomorrow, or going into Monday here, where we fail this area, this 33,000 support, we continue the move down, and then that would signify, you know, as soon as we break below 29 for the third time, we will be probably going towards 25,000-ish. Anywhere from 27 to 25 or lower, who knows? You see, I already have this catch zone drawn out, so that's where I'm expecting to end up, under the orange line. It doesn't matter where. We'll talk about that later. Here's bad sign number, what are we at, 3 or 4? Go to the 30-minute time frame here. Actually, go back one more time. You'll see here, each time that we showed signs of weakness, our catch zone, our absolute lowest catch zone, and we'll ignore this because each time we get here, it's a bad sign. But above that, our catch zone was right at about 31,000. You see this here? You see this? Off the major sell-off, a hit at 31, a strong bounce off, a huge, massive rejection. That signifies major, major support. Now, anytime it levels major support, it can also function as a major resistance when you go to the bottom side of it. This is just indicating the strength of this level in general. See that? Days, weeks above. Then came down to an absolute low, major rejection, all the way back out to the all-time highs here, if you're just starting from mid-May, back to 42,000. Now we crashed all the way back down to that, broke to the bottom side of it pretty easily, by the way. So that's first sign of concern, just flying through a major level of support like that. And then now coming back, breaking below it again, and now trading sideways weekly at the third. And by that, I mean weak strength, not over the course of weeks, but with weak momentum here, trading sideways and getting real cozy with the 31,000 level, as you can see. That is a terrible sign. If you want something bullish to happen, if you're looking for a dip, that's a great sign for you. Here's the next terrible thing here, and this is probably the last one that I have. And then I'll conclude this with what to expect. So we talked about this in the last videos and streams. 33,000 is another really strong level. Anytime we've been able to stay above 33,000, regardless of the little moves we've had down, as you can see here, this 33,000 level holds also a lot of significance. It's the more bullish support level. So if we fly under 30, under 33, usually it's just to maybe get near 31, but then we wrap back up and we come above the 33 again. As you can see here, there was a wick down to 33, a little reversal off 33, moves down to about 33-ish, 33.5, another reversal off 33, support here, 33, another move, consolidation at 33, and then now in between there, you can see like a little bit of resistance, some resistance again. So the 33 level, anything above that is relatively bullish, and anything below that is relatively bearish. So keep that in mind. And then you have the levels in between. So you've got your 31, which is really bearish, and you've got your 35 and plus, which is really bullish. This is really your middle line, 33. So now we're trading comfortably, not just under 35, right? Not just under 35, which is now where that EMA is coming to as well, but under 33, right? So now we're showing signs of extreme weakness, and we're showing signs of weakness at the 31. 31 is really the last level we have. This is now becoming the danger zone. 31 is the last level of hope that we have, because once we break below 31,000 and start showing resistance there, the 29,000 level has only been tested twice. And the last time we got there, we showed signs of weakness by flying a little under where we were the first time. So that just shows you it's a panic zone. It is not an area of strength. It's an area of people freaking out. Now, thankfully, there were enough people this time to say, well, maybe because we hit there before, maybe this will be a dip buy. And so people bought the bottom when we saw rejection out. But the rejection out was still weak to the point where we didn't go above the 35 back to the bullish side of trading, where we were consolidating sideways for weeks. We didn't get back to normal levels. We rejected at that line. So that showed a sign of weakness, just a bounce off and a pullback. So determining what happens next is what becomes really important. Because at this point, now we're in this scenario where we had an expected pullback, an expected bounce, an expected pullback if it wasn't super strong, and now we're seeing this move. We pulled back to 33 after that, which is expected. We failed it, pulled back down. Now we're going back to the 32,000 level, which is another level, but it's a really weak, unimportant level. And now, if we can't pass above 32 or 33 or even 32, that means we're probably going to fail back below this 31,000 line. And when we do that, like I said, there's no real strong levels underneath 31,000. And so if we don't hold above 31,000, we're probably just going down. I really wouldn't consider this much of a level. Now, if you see things coming down there and it starts slowing down and starts to look like it's going to catch, by all means, you can try and dip by that. And on Doge, that would be somewhere around like 21-ish, 20 cents flat or 19. But if you're coming in hot, I would be very careful because there's a strong chance that we fly below that very quickly. And then finally here, there is the scenario where we potentially hold at this weak 30,000 level and we can curl back up, get some strength and head back up. But what I told you guys yesterday was if we end up holding below 33,000, be very, very careful. Because if we also start then failing the 31,000 line, that's a real sign of weakness, and the most probable trajectory, especially if we're under 32 as well, is that we're going to end up going down. At this point, nothing here is indicating that anything else is going to happen, and I think there's even, look here, look at the weakness in these candles, the low volume. People are not buying this up like they should. So I'm just saying we're in the 31,000s area. We're barely moving up. Be very concerned on the Dogecoin side and on the Bitcoin side, and whatever high market cap altcoin that you're in, whether that's Ethereum, Cardano, XRP, whatever, if it's in the top 25 or something, because they are going to get affected by this move that happens here, and it's still looking like Bitcoin, and by extension, Dogecoin, might see a little bit of a move up here, maybe, but then overall, it looks like they're going to crash. So be very careful and start looking for dip buy opportunities somewhere down here in the danger zone once things start to sell off. So if something changes, because there's always the chance that people start to buy up, we get some more volume based off that hope, and then moves start to go up, I'll come back with a live stream or another video update with what to expect based off that change in trajectory. But as of right now, it's very clear that things are heading down. So hope you enjoyed that video. I'll be back later on with some more content, and I just uploaded 2 other videos. If you're into trading SHIB or anything like that, check those out, and I'll catch you guys in the next video. Thank you.